welcome to the Stock Market Morning Prep video for Monday, March 24th. Yeah, on Friday, a little bit of a nasty reversal again. This is, I believe, the third time we had a clear reversal, an intraday reversal where we made highs, new intraday highs. This time it was the S&P cash, and markets clearly reversed. Now, remember I mentioned on Friday's video, there's a lot of shenanigans that goes on with the market makers, especially with quadruple witching. So, take it with a little grain of salt. However, I do feel from my analysis that we are topping. Markets are starting to carve a top here, at least a local top where it could be tradable to the downside. But we just don't know yet. One day does not make a trend. But when you continue to have markets that try to push out of the 1272 extension, which I'll show you in the chart segment, and fail, that's a clear warning sign, especially when price cannot break out. Now, if you take it on the other hand, where price is consolidating above the upper end of the range, that is also quite bullish. So we just don't know. We need to have price break down, move lower, and start breaking key pivotal lows. Then you could say, at least for the short term, we have a tradable top in place. But again, we just keep going up one day, down one day, up one day. Markets do not have any memory. From last Wednesday when Janet Yellen spoke about interest rates, when they're going to be rising, I think I mentioned that. I quoted her, and she started kind of dabbling, saying within 6 months, and I think she really didn't mean that. But markets took a cue because the interest-sensitive sectors, such as the real estate sector, headed lower, and banks, for that matter, actually headed higher, and they're still headed higher. And also builders started breaking down the home construction. So you have to. This market is very, very fast. It's moving very fast at the moment until it can define itself and find its trend. Right now, the picture of higher highs and high lows still remain intact, but you have to realize, be cautious. Okay, be cautious because risk happens extremely fast, and you don't want to be having your book with a lot of longs. You want to really be light, so if the market does turn around, you sell out your longs, get stopped out, and you're nimble enough to get short the market. Okay, so that's what I'm looking at right now. So one day does not make a trend, but there are plenty of clues that are telling me that the top may be in place. Now, remember, markets are literally just out of control the last few months. And you just need one positive catalyst and back on again. Markets, they love buying the market again. So right now you have the Crimea situation with the Ukraine and Russia, obviously putting a damper on things. Last night we had some China econ data that was again a bit light, but then we had some European data that came out pretty good, which is kind of holding some of the losses in Europe, which were down in Europe, but small. S&P was up about 5-6 handles, now sold off down to about 3.5. So at least we're not getting any follow-through selling, and that's why we just don't know. And you don't want to be looking to get short the market just because we had a reversal yesterday on Friday. But you do want to be cautious here, and you want to understand the dynamics of the markets and how they work. And right now, to me, the market's the hardest part of trading is when markets are at points, at conflection points that they're possibly turning. That's the hardest part because you just don't know. So they try to fail and buyers step in, and vice versa. So you take a step back, you keep your light book, and then you just wait until the markets are clear. You know the direction of the market, and then you'll have plenty of time to get short the market, or for that matter, look to get long the market. All right, so let's go right into the chart segment. No indicators today. Nothing has changed, so I'm not going to waste time on that, but I will show you the daily chart here, the S&P. As you can see here, we're up about 4 handles, which is at least a good sign of stabilization. And I do think that yet Friday's move on a lot of stocks were a bit exaggerated because of the quadruple witching. Now, no question about that, the biotech sector and the higher flyer names are taking it on the chin. No question. They got destroyed on Friday, which also hurt the NASDAQ. Okay, also some of the higher flyers, like if you look at, and you should look at, even if you don't trade it, the Teslas, the Netflix, the Baidus, the Apples, stuff like that that were big momentum plays are now getting hit to the waistline. That's not a good sign. Now, the only thing that is good, if we get a rotation in those high flyers and putting money into other sectors, that's also fine because money's staying in there. But if you get money coming out of equities and into bonds, and I'll show that to you in a moment, that's not good as well. So we need to, this is going to be a really important week, I believe, coming to the end of the month. And we could easily get a little bit of a push, but the next week or so is going to be really telling on what's going to happen here between now and, of course, May. And you know that whole saying, "Sell in May, go away." We'll see if we do get a little bit of a sell-off, which we are dying for. We absolutely need a market sell-off to at least readjust these overbought readings in the market. I mean, stocks have been up twofold, threefold, and it's just not that healthy when the markets go straight up. But anyway, 1272 extension remains the market cap. As you can see here, we hit it here and failed, and we hit it right here to the penny on Friday, and then we failed. Okay, so this is an area where we need to continue to watch. And you know, we did have distribution, we have higher volume. As you can see, we did unwind some of that overbought reading on our MACD, RSI, and stochastic, which is good. I like to see it roll a little bit down, maybe come down into the 50-day, 1840 or so, or even the 200, and then roll back down again. Right? We don't want to. The last thing we want is we don't want to take out the March 17th low. That's going to be key and pivotal. Okay, so we're going to be watching that as the markets, as we come into the weeks. Here is the hourly chart. As you can see, right up into here to the extension, came right back down, and now we rallied into the close, and we're just kind of sitting here up at 4.25. Really not a big deal after the market move on Friday, but these numbers remain intact. 1820, 1838. We're going to continue to watch, but you can see what we're doing. We're just chopping around here. Rallied, sold off, rallied up, sold off, and let's see if this thing rallies now and has any legs to break out to the upside. Just want to show you the weekly chart of the spiders remains intact. That's why the longer term picture still remains fine. Nothing wrong with that if you are a longer term player. Short term, I'd be cautious, but longer term here, looking okay. We're in an uptrend channel making series of higher highs and higher lows, and we remain in that channel, so that's fine. Just wanted to show you the longer term picture. Here's our 3 overlay. Bonds actually held in. Gold sold off again, interest sensitive. And spiders actually sold off here, but we're holding within this range. We're within this containment of the upper end of the range here, which is fine. Now, let me just dial into some of this. Here's the TLT, okay? Now, this is the way you play bonds via the ETF. Now, you can see we're in this channel. We're not selling off. If the bonds, if equities were exciting enough to purchase, right, bonds would be selling off. They are not. They've been in this range since February, March, and now going into April. To me, this is going to be a market driver. So we need to pay attention what TLT does intraday. If we start to break out of 109, call it 109.15, and we hold on a closing basis and we chop around for a couple of days above this range, I would be looking to buy the TLT, because why? Look at the volume profiles. Above this range, right, above here, 105, 110, you have a thin zone. That's a volume pocket that will suck price all the way back up to this area. So very interesting here. So I'm going to be watching TLT above 110 on a closing basis, and that might be a longer term picture where you can buy out of the money calls, or if you are trading stocks and you want to buy stocks, you can do that as well. Right now it hasn't proven itself, but this is interesting to watch. This will also give you a good idea of which way the market is headed. Okay, don't forget bonds are inversely correlated. Now, I like USO, which is oil. However, I do think right now we're in the bear flag pattern, which is bearish on the daily chart. And I think it needs to kind of chop around a little bit more, create a little bit of a base like here. You could see here we had this little V bottom here, but you had another base here between these two, and we broke back out again. So as you can see, it does base and then broke down here. So let's see where this flag happens, or it could just chop around again and hold that 50-day moving average, which is also fine. Okay, we unwound that overbought reading, which is great. So it needs a little bit more work. No trade in USO, but I am watching this thing for a possible trade. Gold, I'm not looking at gold at the moment. I do think with the possible interest rate, interest sensitive, now that Janet Yellen had let the cat out of the bag, so to speak, and gold might be a difficult trader. So I'm watching gold, but I don't have anything in gold at the moment. Spiders, so you can see here, we've literally had inside day, outside day. But what happens is, you say, oh, well, spiders didn't really do too much. No, but when you have that clear reversal, stocks intraday have gotten clobbered on Friday. If you absolutely looked at it, you would see a lot of these stocks just rolled over and actually sold off hard, even though the ETF has not. So if you're looking at price action today, you'll know what I'm talking about. So a lot of the stocks are actually rolling over, and it's not a good sign. So we had a inside week, so to speak, right? 1, 2, 3, 4, 5. So we had 4 out of 5 days. We had an inside week. Let's see if this market can gain some momentum to the upside. But again, the bigger picture here, it's okay. It's holding above the 20, but if we lose the 20, obviously, we're going to be looking at the 50-day moving average and this uptrend channel, lower end of the channel. Again, we don't want to lose this March low here. Actually, excuse me, the March 7th, March 14th low would be here. We don't want to be losing the February low. If we lose the February low, this is also key and pivotal. It would take us back to this channel, which would make that higher low from this area. And then something I would reevaluate here, I'd be looking to possibly be buying the markets if the pullback and this market correction is on light volume. Okay, but again, we don't know yet. We need to reevaluate it. Here's the transports, our leader. Not doing too bad, but again, holding above the 20, just kind of chopping around. You see the weaker volume. We did have higher volume on Friday, which marked the distribution day, but again, really not doing too much of nothing. So we're bouncing around back and forth here. We're above that 20, and we should stay above that 20, because if we can take this area out at 136.45, you'll have a run up for the highs. That would help the markets to be bid up here. Now, Russell here really had a clear reversal yesterday. If you looked at the intraday charts, you would see also not doing too good. Not doing too bad either. We're still in that uptrend channel, but it's a mixed bag here. As you can see, Bollinger Bands are starting to tighten. So let's see if we get that little momentum spurt back to the upside and we can get a little bit of a pop. I think if you get a little bit of move to the upside and you're long stocks, I think it's a great time to take them off, and then I would reevaluate them. I do think that markets are not going to make new highs and continue to make new highs. They may push higher, make new highs, and then I would think fail. I think that's going to be your cue to either look for short entries in the marketplace, because when that does happen, I think after 3 times the charm, the third time this happened, the next time if it does pop up and fail, I think the markets are done for a little bit, and that's what I'm watching. Here's the cues. As you can see, the NASDAQ took it on the chin. Big biotech really getting slaughtered on Friday. As well as the bigger names. And now it broke the 20 and now is on a 50. So we're gonna need to really watch this again. Another leader here breaking down. So this thing really needs to revert back up again. We need to take back at least 50% of that candle today, so we can start to move higher and break out of new all-time highs. That would help it out. All right, Intel, one of the charts that we love to trade here, that I like, is Intel. Now, Intel sold back on the market, but I love this chart. This is something that I would definitely get long again, get long and trade this thing. Long again meaning that I would like to get an entry again in this stock. And if we to hold this uptrend line, this would give us the back test. We want that higher low from this previous low. So if we can come in and make a higher low and look at the volume here, really starting to pick up nice to the upside. So if we can really start to break out here, I think that Intel would be a great longer term play to the long side. Okay. Here's Apple. Apple doing nothing wrong, and you can see the markets are really starting to build pressure here in Apple, and this is something that we're going to be watching for a play for this week. Now that options expiration is out of the way, now again, we don't know where this is happening, but we do have a pennant formation here, as you can see, symmetrical triangle. So a breakdown would send this lower, and I think you get a lower trade for a few days, maybe a week. A break up, same thing. So watch the breakout, get the confirmation, and trade it to that side, okay, in Apple. Diamonds here again, Dow Jones, not really doing too bad. It is above the uptrend line, so let's see where this thing goes. But you can see it's consolidating for the last week. So I think the markets are building a lot of pressure. We got the event risk out of the way, which was Janet Yellen, and of course the quadruple witching. Now I think it's free to do what it wants to do. So I think this week is going to be a real important week. Here's the XLE Energy. We have an energy conference this week, so pay attention to some of the energy stocks. I do like the Valeros, the Schlumberger, as you know my stocks. We'll go through them in a moment. But we have the Howard Weil Energy Conference, and that usually is a market mover for some of the energy names. Okay, so let's keep an eye on that. And you can see OIH. Look at the OIH on Friday. Didn't even care. Did fantastic, and that's what I like to see. Stocks that did well on Friday is what you want to look for today in the coming days. Here's Schlumberger, big move. Look at the long-legged doji here. Had a big move up, sold off, and pushed right back up into close in the middle of the range. Nice, nice candle. I'd like to see a nice big full green candle, engulfing candle, but I'll take a long-legged doji. Let's see where this thing goes today. But as you can see, these names are gonna start really perking up here. XOP oil and gas. Energy's building as well. And again, I like the oil and gas plays. I've been showing you this chart for quite some time. It needs to really break out the test. But look, you can see here, look at the thin zone we have. We have a light volume pocket. That means that'll run this up real quick and probably make new highs. So actually did very, very well. Valero came back in, of course, with the other market. But this is another stock I'll be watching this week with the energy conference. And I think here, doing nothing wrong at all. If it can hold up the end of this range, I think that Valero will be a good play to the upside as well. Home construction, obviously interest sensitive. Take it on the chin here. Obviously, I would not be looking to buy the home construction at the moment, but this is going to give us a great entry to get back in it again, okay? So let's watch the home construction. No trade, right? We don't want to catch a falling knife here. We broke out of this bearish symmetry, and then we fell back in it again. So we do not want to be looking to buy home construction. Same thing with the XHB, which is the ETF for the home builders, okay? It is now on the 50-day, clinging to the 50-day moving average. And you can see some of the other stocks like KBH now really breaking down here. You have PHM breaking down here. So let it do its thing. Let it base, and then let's see if we can get back into this this area here. And Lennar too, another one of my favorite stocks to trade. But as you can see, this thing's starting to break down here. So when it breaks down, get out. You could always get back in again. All right, and then let's take a look at the banks, interest-sensitive banks. Obviously, short-term on the short-term yield, 2 or 5 year. They do very well, as you can see, and it is holding up pretty strong. And I do like one of the banking sectors as well. So take a look at J.P. Morgan here. Came back in again. I think this is extended. I wouldn't touch J.P. Morgan, but for stocks like Goldman Sachs, now Goldman Sachs sold off because of the market itself. But watch here, Goldman. Goldman is starting to base here like it did here and broke back out. It is looking pretty good too as well. And then you'll have Citibank now back above 50. Let's see if it chops around 50 here and can hold this area. Easy to manage because your low will be, your stops will be below this low here. So if it can come back into the 50, hold, and pivot, and then break back up again, that's going to be your cue to be looking for some of the banks. Solus took it on the chin, as you can see, obviously, because when you have some of these higher flyers, Solus will get hit. As well as the high-flying names. But again, this will be a good buying opportunity. You have YGE now really breaking down here. So no play in the solars again. But look at First Solar. I mean, just absolutely insane. You have Trina Solar breaking down as well. But again, the First Solar play looking really, really fantastic here. Okay, guys, just wanted to give you guys a little bit heads up for the week. Hope it helps, and we will see you on the next video tomorrow morning. Have a great day, everybody.